Having a bank account is an essential part of life. They are safe and easy ways to store money and retrieve it when you need. But not all bank accounts are created alike. In today's lesson, we will be going over how to choose and open a bank account. While choosing a bank account may seem straightforward, there are actually many decisions to make if you truly want to take control of your finances. The first thing you should check when selecting a bank account is if it's FDIC insured. The Federal Deposit Insurance Corporation will insure up to at least $250,000 per depositor. This means that in the rare case of a bank failure, your money will not be lost. In the modern age, you can choose between online banking or traditional banks. Traditional banks may offer a wider set of products, more ways to get assistance if you have issues, and special programs or offerings. Traditional banks are more likely to have many branches, easy to access ATMs, and 24/7 customer service. However, the trade-off of these benefits usually comes in the form of higher fees. Online banks may offer many of the same services as traditional banks, but not all. However, their benefit comes in the form of convenience, lower fees, and no physical branches. If you prefer to do all of your banking online and don't require many types of products, then this might be a good option for you. Finally, there are credit unions. These are local banks that are owned by its members. These generally have lower fees, low interest rates on loans, and higher interest on checking and savings accounts. However, credit unions are generally small and may not provide mobile banking or online bill pay features. Credit unions are also exclusive, and members must meet certain requirements, such as where you work or live, or even what organizations you are a part of. Once you have chosen which type of institution fits your needs, you will want to compare fees at different companies. Fees can include maintenance, overdraft statement, bounce check, wire transfer, as well as other fees. Make sure you have a clear idea of what you will be using the account for. If you plan on writing a lot of checks, you will want to emphasize lower bounce check fees. Or if you don't plan on writing any checks, you can choose an account with a higher bounce check fee in exchange for lower maintenance fees. The two types of account you will want to decide between is a checking and savings account. Checking accounts are a daily use account and can be linked to debit cards, used at ATMs, as well as used for depositing checks and paying bills. These usually have no limit of monthly transactions, but may come with overdraft fees. Overdraft fees are applied when you spend more money than is in your account, and they can add up quickly if you aren't careful. After comparing fees, you want to check interest rates on each type of account. Most checking accounts will offer little interest, but the money will not stay in the account long enough to earn any interest. It's better to opt for little or no monthly maintenance fees, no minimum balance, and other benefits. Savings accounts, however, will generally offer higher interest rates and a limited number of transactions per month. At traditional banks, the interest rate may be higher than checking, but still very low. However, at online banks, you can find savings accounts with interest over 1%. Another option is high-yield savings accounts. These ensure your money in the account is growing at a higher rate than regular savings accounts. Additionally, many banks offer special programs for high school and college accounts, which generally have little to no fees, discounts posted for redemption, or other benefits. Make sure you look into these accounts and find one that works for you. Finally, don't feel pressure to open a checking and savings account at the same bank. It is reasonable and smart to find the best option for each account regardless of the bank. Money can be moved between accounts, and finding accounts that suit your need is more important than sticking with one company.